So I feel like I might be teaching this a little bit backwards, but I'm going to attack it in this way. We're going to talk about the GST clearing account. Now, that's the account that you're going to deal with in your general journal, in your ledger, in your trial balance, the GST clearing account. I'm going to tell you about what the GST clearing account is and how we're going to treat it in our books. Before I do that, however, I'm going to say that our textbook uses the GST clearing account, but there are several different conventions that accountants use in Australia that are all correct. So you'll see other things if you move on with this stuff, but we're going to deal with the GST clearing account. Now, first of all, what is the GST clearing account? It's the money owing to the ATO. Okay, so the clearing account is the amount of money that we owe to the ATO at any given time. If you've got a trial balance and it says the clearing account has a value of $10,000, it means you owe $10,000 to the ATO. Now, what sort of account is it? Is it an asset, a liability, an owner's equity, a revenue, an expense? Well, the key should be in the definition here, the money owing to the ATO. Now, it's obviously a debt. It's a debt to the ATO, and it's money owing, so you guys should realize that it is a liability. And obviously, liabilities are credits in nature. Okay, so I don't know how far I really want to go with this in this lesson. As long as you understand that the clearing account is money owing to the ATO, which makes it a debt, which makes it a liability, which means that it's a credit account. Now, slight complication. You don't always owe money to the ATO. In the previous example I showed you, you'd only had GST collected of about $10, but you'd paid out GST of $100, which meant that the ATO actually owed you money. Now that isn't a problem for us, because remember that liabilities are credit accounts, but there's no reason that we can't debit a liability account. We debit and credit accounts all the time. So we can actually have a liability where we owed money. That just means that the debit account's greater than the credit account. Now, that's not going to be a problem really, because about 95% of businesses, by far, for them, their clearing account is money that they owe to the ATO. In other words, they collect more GST than they pay out. And if you think about it, for a profitable business, that probably makes sense. They collect more GST than they pay out because they are making more money than they're paying out. Okay, that's the GST clearing account. It's money owing to the ATO. It's a liability, therefore it's a credit account. Maybe we'll look at how to do one of these questions in the next one.